Hello friends, very good evening. I welcome you all to this particular session of the strategic cost management. Friends, I strongly believe you all are doing good and fine at your own respective places. Friends, let us recapitulate what we learned in the previous session. Then we'll move on to the today's session. We need to cover some of the questions from the target costing which we left in the previous session. Apart from that, we need to learn the life cycle costing in today's session. So quick recap. Friends, the notes are available at this URL. You can go to the announcement in the student section of the ICAI website. Otherwise, you can directly follow this particular link in order to fetch the notes, because we are going to follow the notes in order to solve certain questions, in order to write down certain concepts, because some of the concepts are new, which is expected to be tested in upcoming examination. So that's why I just add them apart from the material which is mentioned in the study material, in the easy wording, in the wording in which you can easily remember that, and also in order to you can say that revise the thing while you are preparing for your examination. So quick recap what we'll learn in the previous session. Friends, in the previous session we start our discussion by learning what is the cost control and how it is different from the cost reduction. In the discussion, we acknowledge this fact that the cost control is the cost containment, whereas cost reduction is the cost management technique which ensures the quality while reducing the cost. So in this manner, the cost reduction is better than the cost control. Agreed? And then thereafterward, we take our discussion further. We look the scope of the cost reduction, where we learn that the 70 to 80% of the cost, nearly 80%, although the Gary Berniner and James Bimson said that the 90% even the cost, those who are working in the advanced manufacturing environment, those firms which are working in the advanced manufacturing environment where there is a high use of the machine, they commit there around 80 to 90% of the cost during the design phase itself. So we learn this thing, we acknowledge this thing. Afterward that, we move to the target costing, where we learn that a company is required to manufacture the product while ensuring it must carry the feature which the consumer is required out of the product, and that is also at the predefined price. And that predefined value at which the product is need to be manufactured is known as target cost. And how we can drive the target cost? We can drive the target cost by reducing the desired margin from the target price, and the target price can also be set as market-led price. Agreed? Friends, just afterward that, we learn the various steps which a company need to follow in order to implement the target costing, and also learn the various pros and cons. The step which we learn the company need to follow in order to implement the target costing, those are given on the page number 4.19 to 4.20 of your study material. The pros are given on a page number 4.7 with the name advantage or the benefits, and the cons are given on a page number 4.40. In order to, very good evening all of you. In order to help you, what I will do, I will also quote the page number of the study material, so that while writing on the notes, you can also write that this concept is covered on which page of the study material. Agreed? And friends, in order to be involved in this particular session, I request you keep on sending your responses. When I'll solve question, when I'll do discussion, I give you a minute or two, so that you can also send your response. I will give you the feedback by reading your response, so that your individual understanding must be correct on the concept. Okay. So with this of the, you can say that recap of the previous session, we enter into the today's class. In order to start the today's agenda from where we left in the previous class, let me tell you a small story. Why we need to move to the target costing. Because market is a competitive, the firms are the price taker, not the price maker. Hence firm could not incur the cost whatsoever they feel best in order to produce the product and add the profit margin and then sell it to the market. They need to consider the market. They need to consider the expectation of the consumer, what price the consumer are ready to pay, what is the price which is charged by the other competitor who are also selling the similar product in the market. So hence it is very important that we must conduct the market research, and based upon the market research, we design our product. The product must carry those features which the consumer require. बहुत जरूरी है कि प्रोडक्ट में वो सारे फीचर हो जो कंज्यूमर को चाहिए. Now moving further, if we ensure that the product must carry the feature which the consumer is required, we also need to ensure that feature must be of reasonable quality. Take an example along with me, friends. This is the pencil, mechanical pencil, or whatsoever you name wish to give it. It's a pencil which is using the lead. It is also having a feature of the eraser. On the back of it, there is an eraser. Similar way, you might use in your childhood the pencils. This is a normal pencil with which you can write. This is another pencil with which you can write. But this pencil has a feature only of writing, whereas the another pencil, which is just down under, also have another feature. Apart from writing, you can also use this for the eraser. So you need to be very conscious what feature is required. And secondly, you also need to be conscious that feature must be of reasonable quality. The eraser which you insert must actually capable to rub. It should be of good quality, must cleanly rub the thing which you wrote. Agreed? It's not only important to give the feature, it is also important to ensure the reasonable quality by inculcating the feature in the product. सिर्फ feature देना जरूरी नहीं है, you need to also ensure that the feature is of the reasonable quality. So target costing, while in application, what the company tried to do, company tried to design the product in such a manner that it render the feature which the customer require from the product, and also in the reasonable quality, and also at the lowest price, so that you can capture the market. Agreed? So if any firm which is trying to sell what the customer is required, what feature of the product customer is required, those features of a reasonable quality at the lowest possible price. So company is doing this thing, this entire exercise in order to attain the target cost, in order to manufacture the product within the target cost, the limit which company specify. But what company is doing now, that is known as value engineering. So friend, I'm launching a new concept to you. Many of you heard this word, but might not be knowing the correct meaning. So please revise the meaning along with me. Then I will tell you the proper definition, and then we'll move to the notes and also learn the definition. And there is a case study on this, which is in the chapter number 13. We will also cover that case study, and then we'll move to the few questions of the target costing and wind up. So our target is to complete the target costing in the first 1 hour, and then we will move to the life cycle costing in the remaining 2 hours of this particular session. Okay. So if you have any feedback on the concepts as well as the speed, please continue responding to me in the query. You are free to do so. I love to answer your queries in order to make full worth of this particular session. Okay. So we were talking about the value engineering. Rajay, what is the value engineering? Value engineering is a scientific and a technique which is a systematic one. So the first feature is scientific or the systematic technique. So value engineering is a scientific or a systematic technique in which the company tried to manufacture the product which will render the feature which customer require and of reasonable quality at lowest possible prices. And this also try to emphasize on the design we try to make design in such a manner that we can render all the feature of reasonable quality and at the lowest possible cost. Agreed? So let's quickly revise what are the 5 elements of the value engineering. The first element, it is a systematic approach. It's not a philosophy. It has a defined knowledge. Number 2, what it tried to do, it tried to design the product in such a manner that you can, number 3, that you can meet the need of the customer. The function which customer require from the product, you can render that function, and that function must be rendered in the quality manner. It is not only enough to put the eraser to the pencil. The eraser must work properly. आप लोगों ने ये experience भी किया होगा that sometimes the razor don't rub even though. You must ensure if you are a manufacturer, the razor must rub cleanly. Only then it will be fact that it is a quality function, and you must ensure it is the lowest possible prices. Agreed? So is it you feel now the value engineering is a good technique to attain the target costing? Hence, value engineering is one of the technique or a tool through which we try to achieve the target cost. We try to reduce the cost. Value engineering is a manner of cost reduction through which we try to reach up till the target cost. Agreed? Now, one step further, learn another important thing, because a case study may be asked on this particular thing. And this chapter is very much important. In the November 2018, the chapter number 4 tested for 40 marks. It's an important chapter. So capture another concept very, you can say that in detail in the detailed description. What is the name of the concept? Value analysis. What is the value analysis? Friends, value analysis is the study of the product and its feature and the value which feature gives to the customer. Value analysis is the study of the product and the feature of the product. Apart from the feature, it is also a study what value the product is capable to generate to the customer. But value analysis also comprises the study of the various activity which you perform in order to manufacture a product. If you are selling this pencil, what are the various activity you perform in order to manufacture this pencil so that this pencil can be sold later on to the consumer and consumer can write with this pencil? Those activity also be considered while doing value analysis. And then those activity will be classified in the 2 categories. The first category will be value added category and the second category will be the non-value added category. And what we try to do? We will try to retain the value added activity and we will try to eliminate non-value added activity. By eliminating the non-value added activity to the residual level, we try to reduce the cost. Hence, if the product is in designing phase and we try to reduce the cost by changing the design, we are doing value engineering. If the product is already existing one and then we try to remove the non-value added function to reduce the overall cost of the product, it is known as value analysis. I hope all my friends are okay with the value engineering and value analysis. Ramya asked from the Tiventrapuram, sir, is the value engineering similar to value analysis? No, Rajay, no, not at all. Lawrence de Mille, who in the year 1947 gave the concept of value engineering, although in his book, in the preface of his book, mentioned value engineering, value analysis, both may be considered same, but in actual they are not same. There is a minute difference. Ramya, I am explaining it once again. Rajay, dhyan se suniyega. What is the difference? Value engineering is designing the product in such a manner that you can reduce the cost, but at the same time you wish to ensure it must have a feature and feature must be of reasonable quality. It means value engineering largely deal with the designing. It can be implemented when the product is in the designing phase. Whereas value analysis can be performed at any life cycle. at any phase of the life cycle of the product. Existing product, value analysis, new product, value engineering. Isn't it the two technique both can be used for the target costing? Yes. For the new product, you are going to apply the value engineering, and for the existing product which company already has in the market, you can apply the value analysis. But Rajay, learn one more thing here, which is very, very, very important. Both in order to perform value analysis and value engineering, you need to perform functional analysis. Now, what is a functional analysis? Functional analysis is the study of the function which a product will render. Now, let me take you a little bit advanced version, but that is very much essential because a case study is asked without much reference in the study text. So you must know the background as well in order to answer the case study in a very well manner. So one can say value is nothing but the feature of the function which product render and the cost which customer incur on the product. I will say my word again, Rajay, so that you can capture. Okay, but there are some other queries. I will answer first those, then I will move forward. Okay. The first query is from the Anjali from Punjab. What she asked, sir, what is the difference between the two? Anjali, the value engineering is largely applicable and deal with the design of the product. It is applicable when the product is in the designing phase. Take an example. I asked the Orpet company manufacturing division to manufacture this calculator. While they are designing this calculator, they made the structure. Okay, it will look like this. 2 button is in the green color, remaining button is in the gray color, and it will having this much character of display. It means while they finish the process of design the product, they commit the cost because they finalize the design now. Now the machine need to be purchased according to this design only. The material need to be buy according to the specification only. Hence, they commit the cost. It is very important to prepare the design very skeptically, because by changing a minor change in the design, by making a small correction in the design, by improving the design by just small inches, you can save huge cost when the product is in the manufacturing. Okay. You might remember a graph which we discussed in the previous class. What we discussed, that 80% of the cost is committed. Again, I'm mentioning committed, not incurred. The cost will be incurred when the production will be ongoing, but it is committed when the product is in the design phase. So when you try to change the design in order to reduce the cost, it is value engineering. When you study for the existing product, what are the various activity we follow in order to manufacture this calculator? Can we eliminate some activity which is a non-value added activity? Then it is known as value analysis. Please, Rajay, respond. Is it clear to you or not? Then there is another question from the Hyderabad. Raviteja Sharma asks, sir, can you please tell again the difference between the value engineering and analysis? Rajay, I already explained. I believe it's clear to you. All my friends, I believe the difference between the value engineering and value analysis is clear to you. If any of my friends still find it difficult, please respond back to me. I'm ready to explain it once again. In the meantime, while you are sending me the queries and responding back, what I do, I will explain this thing to you. Okay. I buy this whiteboard marker in order to write in this particular class for you. And I buy it for the 25 rupees. So this is the cost to me, 25 rupees. What function it render? It render the function of writing on a whiteboard for my friends. Agreed? Now moving further, the value. What value I drive by writing for my friends? Obviously, I learn the money. I will earn some money, but you will learn some concept. So the value is both the quantitative and the qualitative, and also some include the monetary consideration. Let's ignore what is the consideration, what is not. But what we need to derive or learn from this formula if we wish to enhance the value which the customer derive from any product, what we need to do? Either we need to increase the function which the product can render. The function which product have, we have to increase those. Or what we need to do? We need to reduce the cost. Because by seeing this formula, you can simply identify value has a positive relation with the functions and has a negative relation with the cost. So by reducing the cost, you can improve the customer experience. You can improve the value which customer perceive from a product. Or by improving the function, by increasing the function, you can enhance the customer experience. You can improve the customer experience. Okay, both are answer clear here, sir. Okay, thank you very much, Raj. So you must understand this equation. This equation is very important because this is the base of entire value chain and value analysis. What you try to do in the value engineering, you try to render the functions which customer require at the lowest possible cost and also ensure the quality. Agreed? And what is the value analysis? You try to evaluate what are the various inbound and outbound activity which you perform in order to manufacture the product. Try to link it with the value chain analysis, Michael E. Porter, which you studied in the chapter number 1. So you need to study all those activity and classify those activity in the category of value generating activity and non-value generating or non-value added activity. What then next you need to do? Eliminate them if you can. If you can't eliminate them, residue them. Reduce their level. Don't try to purely eliminate. It might possible by eliminate your process may stuck. So try to reduce it up till the level it is possible. Now moving further, value generating activity. If you are a master of the value generating activity, keep performing it. But if you are not a master in that, you don't have expertise in that, try to outsource it. It might possible that it become a cheaper alternate for you. Okay. So value has a positive relation with the function. You try to give maximum possible function to the customer and try to reduce the cost in order to increase the value of the product. I believe it is clear to you. Now, Raji, can we move to the notes? Okay. So this we already learned in the previous class that what is the steps, and these steps are given on the page number 4.19 to 4.20 of the study material. They gave it in the 5 paragraph. I try to ease, in order to ease the experience of your learning, I try to, you can say that bifurcate them in the form of the various step and write the various step which is need to be performed. Okay, Rajan? Now moving further, the note number 11 that we already studied. What we studied in the note number 11, the various principle. It is entirely new thing, but based upon our learning of the previous class. Then we studied the pros. The pros are given on the page number 7 of the study material. Then we studied the cons. The cons are given on the page number 4.14 of the study material. Then thereafter, we studied this particular case study. Now we are moving forward in today's class and we are going to learn the note number 40. You might be surprised, sir, why this much of the theory? Friends, the nature of paper in this manner that the case-based question will be asked. Hence, in order to explain your concept, you must be able to write something. You must be able to, you can say that, give a proper explanation. It is very important that you know the theory behind the concept as well. So that's why I'm just discussing it with you. Okay. Now the note number 19, very, very important. What it concern to impact of target costing on the profitability. The question is very clear. Does target costing enhance the profitability or improve the profitability? Answer is yes. it impacts the profitability in two ways. What are those two ways in which it impacts the profitability? The first way, it tries to reduce the cost over the product life cycle. As we already discussed, value engineering is a technique of the target costing. And value engineering do what? Value engineering try to design the product in such a manner that when the product enter into the manufacturing stage, you are supposed to incur the less cost because your design is efficient. And mind, my dear friends, design is not only of the product, design is also of the processes through which the product will be manufactured. So whensoever we quote the word or write down the word design, it also includes the design of the product and the design of the processes which the company is going to follow in order to manufacture the product. By picking up right design of the product and right design of the processes, obviously we try to reduce our cost. By reducing the cost, we try to enhance our profitability. Hence, target costing has a positive impact on the profitability. Further, friend, in the target costing, we targeting the correct price. We don't incur the cost and then add up the profit margin. Instead, that what we do, we did the market research in order to decide the price and then reduce the desired margin and then try to manufacture the product within that cost. So if we already take the prices which are prevailing in the market, so do we need to reduce our price in order to sell the quantity? No, because the price is already that which the customer is ready to pay. Do we might face the situation, or is it possible that we need to face a situation where we're not able to sell entire quantity? No. If you remember the step which we discussed in the previous class, we not only decide the price, we also decide the quantity which we are going to produce at that price. So price is already decided at which the product will be sold. Then we drive the cost in order to manufacture the thing. The quantity is also decided which the customer are ready to buy. Hence, it is not possible that our revenue gonna decline. No doubt, dynamic is nature is of the market. Market is a dynamic nature. It may possible that due to the uncertainty, things may go against you. But there is an equal probability. Things may go more in your favor, may go against you. But if we see as a neutral, target costing helps the profitability in two ways. The way one, it reduced the cost, and the second way, it ensured the revenue. So what you will need to write, number one, it tried to reduce the cost. At the same time, it tried to ensure revenue must remain intact because the price is predefined and the volume is also predefined, okay, based upon the market itself. So Rajay, if there are companies which are keep on introducing the new product, for them it is essential that they keep the target costing as central part of their strategy. Agreed? Obviously, every firm has some strategy. The strategy of cost leadership, the strategy of focus, the strategy of differentiation. So the company which is dealing with the new product, which keep on launching the new product, what is important for them? That they must consider target costing as part of their strategy. Okay. Now this question, the note number 15, is already asked in the previous exam. What was asked? What are the various situations where the target costing will give the maximum advantage? And you can see it is written clearly here that target costing is most useful in those cases where the substantial amount of the product cost are committed or locked during the product design phase. And what we discussed in the previous class with the help of the graph, even though we discussed in the today's class as well, that 80% of the product cost is committed at the time when the product was designed. If we decide that the marker will look like this way, it have this much of the plastic and this will be the shape and this will be the outlay. Obviously, the mold in which the plastic is transferred into this shape will be bought based upon the design, and the plastic need to be bought. So the cost of the product is depend upon the design, and the 80% of cost you already committed while you design the product. So those cases where the design is important, where the cost is locked at the time of designing of the product, the target costing is very useful. Now, Raju, you need to tell me, in the service sector, is there any specific design of the service? Answer is no. No doubt you can establish the SOP, standardized operating procedure. Take an example of a barber shop. Everyone need a customized product, and you cannot standardize the thing much. You need to leave the room for the customization. It is only the feature of manufacturing industry of the product which are tangible in the nature that it carries some sort of the design. Because it carries some sort of design, hence target costing is largely beneficial in the case of the manufacturing industry, where we are going to produce or manufacture the product which is of a tangible nature. Agreed? This thing is written over here, that it is a common feature of the produced goods or the goods to be manufactured, but rare case in the case of the services, because in the service industry, customization is highly essential. We need to be work on a need-based system. Hence, we cannot fix the design. We cannot fix the thing in the advance. Only thing in the service industry design team can do, they can streamline the activity. They can suggest the SOP which employee must be follow in order to render the service. Now, while we read this note number 15, I mentioned here that what are the various industry where the target cost can be advantages. These industry are also quoted on the page number 4.17 of your study material. I also quote the same in the note number 15A for your reference. What are those categories where the target costing can give the maximum advantage? Those companies where there is a use of the assembly. I also explained in the previous session, but I will explain it again for my friends which didn't attend the previous session. Friends, you can see this scale. I hope this is visible to you. No doubt right now I am in the small box and the screen is in the larger box, but I hope you can see this scale. This scale is a finished unit and finished goods in the one component only, plastic. But if you see this sharpener has a plastic body, then the blade, then a screw with which the blade is tightened on the plastic body. So this sharpener has the three assembly component, the plastic body, the blade, and the screw. So where there are the product which involve the assembly into the final product, there the target costing is highly useful. Why? Because there is a scope, we can reduce the cost. We buy the assembly maybe from the supplier, we can force the supplier to reduce the price. If we are ourselves manufacturing the assembly, like Maruti is not manufacturing all the assembly by their own of their cars. There are many suppliers. So they may ask the supplier, if they are producing it themselves, they may try to reduce the cost. There is a scope of cost reduction. Okay. We can shift to the cheaper assembly. You may ask, sir, give us the example. Okay, I'll give you the example on this then. Okay. No doubt it will take some time, but your experience must be good about the costing. Okay, which is more important. You can see these stick files. I hope it is visible to you. There is a first stick file of a red color, another stick file of a blue color. You can see, apart from the file folder, the stick is also of the same color. The red, the blue, having the stick of the blue color. What you can do if you are using the product which is involved of the different component, you can standardize those components. Why? How? This is the white stick. Instead of using the stick of the same color of the file cover, use the standardized white stick on all the files. If you are producing the white stick in a large number, due to the economy of scale, your cost may come down. Hence, the standardization of the component in the industry where we are using the various assembly component in order to make the final product, it becomes easy for us. It becomes easy for us, friends, to reduce the cost. Now, please move back to the note. Now, the second industry at which the target costing may help us, and that is where there is diversification of the product line. What does it mean? Various products we are renting, and what we can do, we can standardize the component which will be useful in all the product. We already take example in the previous class. We can take example here as well. If a company is making the various model of the car, what it can do, it can use the same handle design in all the cars door. What it will impact, it will improve the economy of the scale, as well as it is also reduce the time which the worker need to spend while installing the handle into the door of the car. Okay, now further, the company which use the technology, because if you design the product in such a manner that it need a less time in the machine, you will buy the machine of the you can say that low capacity, or you can buy the machine accordingly. Hence the production capacity or the production utility which is largely engaged or dependent upon the technology, there is a high scope of the target costing, because even though if you reduce the production time, run time by the 5 minutes, the machine is a huge, spending the huge electricity. By reducing even the 5 minutes of the product manufacturing, you can save good number of electricity and the other overhead. I only take the example of the electricity in order to illustrate. Okay, the last category of the firms where the target costing may be advantageous, that is in the process of implementing the management techniques, just like the GIT and the value engineering. The target costing is helpful. Obviously, value engineering is a tool of the target costing. So if you are implementing the value engineering, automatically you want to attain the target costing. So if you are doing the target costing, obviously you will look your inventory should not lie back, and you will try to impose this inventory control. So these things are interrelated kind of thing. Okay. Now moving to the note number 16. Note number 16 given on the page number 4.18 of your study material. Okay, friends, 4.18 of your study material. That what are the cases where target costing is not expected to give much benefit. It doesn't mean that target costing is not going to give benefit. Target costing will lead to the benefit, but the benefit are not likewise it is in the manufacturing industry. And you can see both the example here are either the service industry or of the product which has some scientific importance, where the design is of no importance. Where the design is of no importance, scientific properties is the major factor there. Okay, so two examples are quoted for you. Fast food restaurant. Can we establish some sort of design in a fast food restaurant? No doubt we can decide the layout in which the customer who come to the restaurant for the purpose of eating will sit. But it will not benefit much, because depending upon the need and depending upon the experience of the customer, feedback of the customer, the layout may be required to change. And this thing is explained over here. Further, in the case of the chemical, where we are producing chemical as a raw material, is the design important? No, it is a raw material. Design is not important at all. Only the properties, scientific properties are important. That is need to be considered. Hence, where the design is of less importance, the function are fixed. There is no major variation of the function. There, the target costing is of not much important. Okay, so this thing is explained in the note number 16. Now we are moving forward to the note number 17. Ramya asked the question again, and what she asked, just give me a minute so that I can answer. Sir, in case of the example with the stick file, if the customer is conscious about the color offered by the competitor, is it worth standardizing? Ramya, please understand one thing. Value is of two types, use value and esteem value. Whether by changing the color of the stick, use value change? Answer is no. Only esteem value change. then you need to go to the Pareto analysis. Your 80% of the customer give you 20% of the profitability, and the 20% of customer give you the 80% of profitability. If the customer whose esteem is impacted due to the change of the color and he represents the 80% group, then don't change the color. But if the customer largely concerned about the cost, you need to see the customer base as well. Now, customer profitability, you are also studying in the strategic cost management. If your customer are the cost conscious, then do the change. So you need to understand your customer as well. That's why in the previous session we said that target costing or the cost reduction is not a one-man job, it's a team job, and that team is a cross-functional team which also include one representative from the marketing team, which keep on telling that customer is very specific about this function, sir. If you change the color, he will not like the product. Okay, so you need to see that what is the intent of the customer and what category of value he wish to drive, whether he's going to drive the use value or esteem value. I need a watch. This is a use value. I need to see the time, but I need a radar watch. This is a esteem value. Okay. Another question from Ahmedabad. Under the target costing, we obtain a target cost beyond which the cost should not cross. Then in such case, the target cost is merely a standard cost for no, Rajay. Target cost is not a standard cost. Target cost can be set a yardstick which you try to attain. Whereas the standard cost is based upon your last year actual and based upon certain other fact as well. The standard costing is a cost control technique. It is a periodical technique. It may be applied in each period again and again. Whereas the target costing is a specific exercise. You perform it at the time of introduction of the product into the market, when the product is in the designing phase, and you may also apply it when the product is already existing in the market, but you wish to reduce the rate in order to capture the more market share or to counter some new entrant. Like the Airtel wish to counter the Jio, Airtel decide to reduce its cost. It may go on the target costing drive. But target costing is not a routine practice that you keep on doing target costing again and again and again and again. Why? Because there is a diminishing margin return. When the first time you will implement the target costing, try to identify the various changes in the design which are possible to reduce the cost. It is very easy for you. But later on, when you do the value analysis, you try to reduce the activity which are non-value added. Whether it's convenient for all the time to identify the new activity which can be eliminated, it's quite difficult. When you take the first round to reduce the activity which are non-value added activities, quite easy to identify such activity. Second time, quite difficult. Third time, quite difficult. So standard costing is a cost control technique, periodical technique, may applied each financial year or each costing year. But target costing is a strategic cost management technique. It's a cost reduction technique, largely implemented with the help of the value engineering, value analysis. And it is not a routine function. It might possible that we run one drive of the target costing and then we leave it. Okay, we attain the target cost. Now we'll keep on producing the product at this particular juncture. We keep on doing that. And what we can do after, once we practice the target cost, once we do the value engineering, we can then rely upon the Kaizen. We can keep on doing the small improvement with the help of the Kaizen. Okay, I hope it is clear to you. Now coming back, note number 17, friends. We need to focus on the speed as well because there is a large content which we need to cover. Okay, I hope you understand my problem too. But don't worry, I'll not skip any thing, even though the question which you asked, I surely answer them. Okay, friend, what are the 4 techniques of the target costing? The 4 techniques are value engineering, Kaizen, lean manufacturing, DFMA. What is the full form of DFMA? Design for manufacturing assembly. This is a new thing which I expect surely be asked in the upcoming examination or maybe inserted into the study material in the upcoming editions. Kaizen you already studied in the chapter 3, lean manufacturing you already studied in the chapter 3. Now we are going to discuss the value engineering and value analysis. I already explained the 2. What I am doing here, I am recapitulating these 2 along with you, so that it must be stick in your mind and stick it very, very, very clearly, crystal clear, so that you will not be confused further on. Okay. Now revise along with me. If you wish to write, you can write as well. I will speak very slowly so that you can write it. Value engineering is the systematic approach. Value engineering is a systematic approach. Although what you can do, you can underline here. Okay, in the notes itself, do underline along with me. Value engineering is what? It is a systematic approach to ensure the product must render all the functions. You must consider the functional requirement. Product must render all the function, and that is at the lowest possible life cycle cost. Agreed? But where it is written, the product must render the function, you need to write one more thing. What you need to write? Of reasonable quality. Write down reasonable quality. Okay. So value engineering is what? You need to design the product in such a manner you need to design the product. Sorry, my handwriting is not so good. Okay. You need to design the product in such a manner that it must render the function which the customer desire, and the quality of function must also be good, and you are offering these features at the lowest possible cost. Okay. Now moving further, value analysis. Value analysis is a scientific technique. What it do? It also improve the value. But how it improve the value? By either improving the experience or the performance attribute, means by increasing the function. You might remember formula which we written on a board. By improving the function, or what you can do by reducing the cost. How you can reduce the cost? By eliminating the non-value added activity. So see the 5 important features of the value engineering. Write down these features along with me. Value engineering majorly applicable when the product is in the design phase. Write down the word design. Second, it is a systematic approach. Number 3, it considers the various functions which the customer require from the product. Number 4, customer is looking for the function which is of reasonable quality. So write down reasonable quality. Number 5, you will try to render these at the lowest possible cost. So write down lowest possible life cycle cost, because you are designing the product in such a manner, whenever you manufacture, your cost will be low. Hence, by designing the product good, you are saving the cost when you manufacture the product. And product will be manufactured when it is introduced in the market, when there is a growth in the market, when there is a majority in the market, maturity in the market, when there is a decline in the market. Hence, you are reducing entire life cycle cost by designing the good product. Agreed? Now, what is the value analysis? Value analysis is the study of various activity. Those activities need to be classified in the value added activity and non-value added activity. What is need to be do? Number 2, what is need to be done with the non-value added activity? Eliminate them or reduce them. What is need to be done with the value added activity? Try to improve on that, try to focus on that. They are your critical success factor. Try to improve them. By improving them, what you will do? You will enhance the value which you will render to the customer, and by reducing the non-value added activity, what you will do? You able to reduce your overall cost. Okay. So this thing is clearly mentioned to you that while doing this value analysis, the value perceived to the customer is very much important. Hence, you need to focus upon the feature which the product is rendering to the customer. Hence, the functional analysis is integral part of the value engineering as well as value analysis. Don't worry, on the next page, we have a case study. We read the case study and you will understand these things again, or in the manner how you need to answer if the question is asked from this thing. Apart from this, Rajay, on the page number 4.10 and 11 of your study material, few questions are given. These are the questions which you need to ask while performing the value analysis and value engineering. What are the questions? The first question, can we eliminate some function from the production process? That is, we already discussed. Is there is any non-value added activity? If yes, you can eliminate that. If there is no non-value added activity, you cannot eliminate that. Okay. I hope you got the first question. What is the first question? You are trying to identify the non-value added activity. Who asked this question? The target costing team asked this question. From whom they asked this particular question? They asked this question from the management or the managers of the different division. They will go to the production manager and ask that, can we eliminate any function from the production process? The manager will tell, okay, without this activity, the production can be completed and the product will be of reasonable quality. We assure you. Then they can eliminate that. Okay. I hope you got the first question. Moving further, second question. Okay. Second question. What is that? Can we eliminate some durability or reliability? Means, can we compromise with the quality to some extent? Friends, you might remember or might notice this thing. Whenever you buy a sanitizer, on that or on above that, on the cover, it is usually written that protects from the 99.99% of the germs. I buy the N95 masks around 6 months ago when this COVID started. And I shocked after reading it. It will protect you up till the 99.9%. Why not 100%? It means it is not always possible to ensure 100% quality. There might be a scope of little bit of a defect. You need to study what is the scope of defect, whether the customer will accept the product with a little bit of defect or not. Take an example on the diya which you lighten up on the Diwali recently. All the diya are of not same size and the same pattern and the design. Some are not properly, you can say that finished, but still it is okay to use and you use them. So it is not always essential that the product design is very critical to its use. Sometimes design can be ignored little bit. You need to study your product. You need to study your industry. If you are in the medical and the pharma industry, you cannot compromise with the design. But if you are in making diya, a little bit compromise with the design is acceptable. Okay. You need to study the Six Sigma here. You need to link it with the Six Sigma. At what Sigma level you wish to work. Okay. Moving further. Can we minimize the design? What is the mean minimize the design? Reduce some feature which is not of very much important or reduce the functionality of the feature. Don't like if you remember this example, we take the pencil and the pencil with the eraser. I hope it is visible to you. Don't remove the eraser if you are selling the pencil with the razor, but you can remove the size of a razor, reduce the size of a razor. Okay, so you keep the function, but the functionality of that, the utility of that, you try to reduce that. So this is the question number 3. With this, you can reduce the cost further. Can we design the product in the way in which it is better for manufacturing the process? So this is the pencil. I hope it is visible to you. No doubt it's in a small screen, but I believe it is visible to you. At the back of the pencil, this is the cap. The cap is having the hole from one side. So when the customer buy this particular product, so he finds the product like this way. So the worker who assembled the product, who need to fix the cap here, when he picks the cap, he automatically knows hole is on this side. So this side must be on a down and the other side is on a up. So assembly for him become easy. So what we can do, we can design the product in such a manner that the manufacturing or the assembly may become the easy. We need to understand in this manner. Like the doors of the car. There are two sides. The rear door and the front door are different. The four door cannot be mixed among themselves, because the door which is on the driver's side, the front door, cannot be fixed on the other side or at the back. So design the product in such a manner that it helps you in the assembly. It helps you while you are manufacturing it at the further stage, or it is on an assembly line. Okay. Can we substitute the part with the you can say that standardized part or some cheaper part, like the example we take in the stick file? Agreed. Further, can we combine some step, like at the time of doing the primary packing, can we do the secondary packing? Can we take the supplier assistance? Rajay, please understand this thing. Value chain analysis is not limited to your organization. You can do the extended value chain analysis. You can also include the supplier, and your distributor and the retailer, so that you can enhance the value which is available to the end consumer. Hence, you can include your supplier's representative in your target costing team, in your value engineering team, and ask them, so we are going to buy the assembly. Assembly means a component. You might remember the KTC question. In the KTC question, we use the two assembly, H1, H2. So the toy making company buying the component from some supplier, so they can force the supplier, so why you are not trying to reduce your cost? It will also help us to reduce our cost and attain the target cost. Agreed or not? So take the supplier's assistance. Further, is the better way? Is there any better way? If there is any better way, shift to that. Change your SOP small a bit, by which you can reduce the cost or improve the function. Larger function, larger value, larger price. Your profitability will improve. Or if the function improve, which will let you less time on the production to do the production, obviously it will help you by reducing the cost. Further, the note number 19. The initial value engineering may not uncover all the possible saving. Then what you will do? You will rely on Kaizen. It may possible that value engineering team assigned with the task while the product is in the designing phase reduce the cost. They develop a best design, but still later on competitor come with such a design which is better than you. Their engineer are graduated from some better school rather than your engineers. So they apply out of box idea. So what you can do then? You can keep on relying your workers' input in the form of Kaizen and try to reduce the cost. No doubt there is another technique available to you, friends, that is the benchmarking and the reverse engineering. You can buy the customer product and dismantle it, learn what are the parts they are using and do the same. You can also do this. So reverse engineering is also one of the technique to attain the target cost. Although right now it is not part of your curriculum, but somehow it may also be applied and we practically apply it. Okay. Now moving further. So if the company not able to identify all the possible scope of the cost reduction with the help of the value engineering, what it can do, it can rely upon the Kaizen. Surely Kaizen will help in attaining the target cost. Okay. Now moving further. This is a case study regarding which I mentioned that with this you will able to understand this value analysis and the functional analysis once again. But prior to that, I wish to finish last theory topic with which the theory of this particular portion of target costing will finish. And that is what the new technique, that is the design for manufacturing assembly. What is basically design for manufacturing assembly? He say don't only design the product, but also design the process with the help of which you will assemble the component into the final product in order to manufacture the product. So what are the two major objectives of DFMA? What are the two major objectives of DFMA? The first objective of DFMA is reduce the number of components if you can. If you are manufacturing some product in which there are 3 components, like this particular sharpener, can you reduce any component? Only thing you can do, inbuilt the blade in the plastic body. Nothing else you can do. But whether it will keep the same utility or not, it may keep the same utility, may not. So you need to study. But the attempt of design for manufacturing assembly is what? Reduce the number of assembly component which is need to be assembled in the final product. If you reduce the assembly component, it will reduce the assembly time. If you reduce the assembly time, it will reduce the labor cost as well as the overhead cost. By doing this, you can reduce the cost. Number one. Number two, what is the objective of DFMA? The DFMA says if you reduce the component or you use the standardized component, means one component for all the product range. Likewise, we did in the stick file. It will bring the economy of scale also. Okay, standardization bring the economy of scale too. So Rajay, what I feel that this thing is also clear. Ramay, is it audible now? Please respond back. Is the voice is audible now? Otherwise, wait for a minute. No doubt the technical person will help us in the manner he can do. Okay. Okay, friends, what I do, I discuss this case now, and then we'll move to the question. We have a two question on the target costing, one from the previous examination and one from the study material, and then we'll move forward. Okay. Friend, please let me know. Am I audible? Any of my friend who is online, please revert back in a query box. Okay, we will move further. Yes, it's audible. Okay, friend, now I'll read this case study along with you. What it says, the Queenstown Wood Company, KYC, began 20 years ago as a small family-run business supplying the custom-made school furniture. Now, the QYC or QWC has grown into thriving hub of the experts specializing either in the custom-made locally sourced or quality imported commercial grade furniture. Now, either they are selling the locally made furniture or they are selling the imported furniture. Further, the new appointed CFO is concerned due to declining trend in the sale volume and the profit for last 3 years. The cost is also increasing. He observed that the reason of this trend is increased cutthroat competition that has emerged over the last 3 years. For many years, QWC has known for the high quality, but now the quality is being matched by the competitor. So what they say, CFO is very much concerned about the performance of the company, financial performance of the company. Why he is concerned? Because the profit is dipping. Why profit is dipping? Because sale is dipping. Why the sale is dipping? Because there is a competition in the market. And why there is a competition? Because up till now, the 3 years prior to now, the competitor not able to sell the product of the same quality. But now the competitor also able to sell the same quality product. The QWC market share is declining due to the equivalent product being sold by competitor at relatively lower prices. It is considered that to offer such low price, the furniture's production cost of the competitor must be lower than the QWC. So what it says, the competitor are selling the product to the customer at the lower cost. In order to regain the market share, you also need to reduce the cost. Hence, you are required to advise how QWC can improve the sale volume and the cost. Although the word improve is written, but what you need to study, improve the sale volume, increase, and improve the cost in sense of reducing the cost and increasing the profit using the value analysis and functional analysis. Okay, so you need to know both. Although functional analysis is nowhere discussed in the study text, but you need to understand. So we already studied that. What you now need to do, you need to study this solution. I will discuss in the form of a story with you. What is the value analysis? Value analysis is a study of the various function. Then number 2, eliminate the function which are non-value added and keep the function which are value added. Agreed? So this is the value analysis in a simple way. What is the functional analysis? The functional analysis is a study of the function which the customer requires. And you must render the feature which customer requires. You must value that feature. Value analysis is the study of the activity which we perform in order to manufacture the product. It means it is an activity centric. It is not the product centric and not the customer centric. Whereas functional analysis is what? The function which customer requires out of the product. Hence, it is a customer centric and the product centric. So I hope you got the difference between both the value analysis and the functional analysis. Okay. If it is not clear to any of my friends, please write down in the query box quickly. What is the difference between the value analysis and functional analysis? Value analysis is the process centric through which the product is manufactured, and you try to eliminate non-value added activity. Whereas the functional analysis is the product specific and the customer specific. If you are selling the product which is more centric to the customer, obviously customer love to buy from you. The QWC can retain or can even though capture the market share, not only retain, they can capture the market share as well. Agreed? One thing you need to note about this, what is that? That in the given case, the value analysis is expected to give the more advantage. Why? Because functional analysis ensuring you must render the function which the customer desire. It's not largely concerned with the cost. It's concerned with what the customer need, the function. Okay, it's the product specific. It's not a process specific, and the cost is incurred due to the processes. Here, what is the problem? The competitor are selling at the price lower than you of the same quality. By improving the quality, if you decide to charge a higher price, it is not a possibility there in the market. What is the possibility? That you also need to reduce cost. How you can reduce the cost? By eliminating some non-value added function. And in order to eliminate non-value added function, what is the best thing to do? Value analysis. So read this line along with me, which is very important. Both the value analysis and function cost analysis may be used for QWC. However, the value analysis is likely to be more useful technique because office table and chair are such an item which can be demanded more on the basis of their use value rather than their esteem value. Now you can link what I mentioned you that there are two sort of the value, the use value and the esteem value. Okay, what is the meant of the furniture? To sit. Hardly anyone concerned whether it is a chair of the newcomer or some local brand. Agreed or not? So here the customer are price sensitive. You need to reduce the cost by increasing the function. Nothing will do. You need to be cost leader. You need not to be the differentiator. Okay, I hope you got the point. If any of my friend is not clear with it, please revert back quickly. Okay, in the query box. We will move further. Now we will solve two questions and then we will shift to the life cycle cost. Rajay, if any of you find any kind of difficulty in theory, please let me know. Very, very important question. This question was asked twice. Firstly, in the RTP May 2018, then MTP May 2020, then also in the study material. Okay. I feel we must move on the question. Okay. If you have a query in the meantime, keep on sending me. I will revert back to you. Read out the question along with me. Storewell Industry Limited manufacture the standard heavy duty steel storage rack for the industrial use. Each storage rack is sold for 750 each. The company produces 10,000 rack per annum. The relevant cost data per annum is as follows. What is the budgeted quantity of the material? 5 lakh feet to manufacture 10,000 stands or the racks. What is the actual quantity used? 5,20,000. It means the 20,000 square feet you used more than you required to. Hence, there is material usage variance adverse. So there is adverse material usage variance. Although I'm not teaching the standard costing here, but this is only for your reference and understanding. Further, how much cost you this 5,20,000 square feet? 20 lakh rupee. Can anyone tell me what is the material cost of one rack? 20 lakh rupee to manufacture 10,000 rack. Hence, in order to manufacture one rack, you are incurring 200 rupees. Okay. Moving further. The labor hour allotted to you or budgeted was 90,000, but how much you actually spent? 1 lakh, 10,000 labor hour, you spent more. So there is labor efficiency adverse variance also. Further, the 10 lakh rupee you incur for this 1 lakh labor hour. Can anyone tell me what is the labor cost to manufacture one rack? 10 lakh for the 10,000 rack. So it is 100 rupee. How I computed? 10 lakh divided by 10,000. Further, machine setup. The machine setup required 15,000 hour and you did it within 15,000 hour. And it costs you rupees 1,50,000 for the 10,000 rack. What is the cost per rack? 15 rupee. Is the setup time is a value added activity? No. Material is must. Without that, the product may not be there. Labor is must in order to create the shape utility. Assembly is also must in order to create the shape utility. But setup is not must in order to create the shape utility. Although it is must for the production. But this must you do when the worker is working on the product, when the product is not in the machine. Why you let the machine wait for the 15,000 hour? So this is non-value added activity. Machine setup is non-value added activity. It is not going to add any value for the customer. No doubt, it may be part of the production process, but you need to keep on focusing how you can eliminate that or how you can reduce it to minimum possible level. Further, the next and the fourth component, assembly. Obviously, after making the shelves and the bars, you have to attach the shelves to the bar in order to make the rack. So 2 lakh hour was budgeted and 2 lakh hour actually you spent. What was the cost? The cost was 30 lakh for this 2 lakh hours. Can anyone tell me the cost per rack of the mechanical assembly? Yes, it is 300 rupee. So what is the total cost to manufacture one rack? The total cost to manufacture one rack presently is 650 15 rupee. And what was the selling price? The selling price was 750. So at the sale price of 750, you are producing the rack for 615 rupee. What is your profit? The profit is 135 rupee. The profit is 135 rupee. Okay. Now read further. The actual and budgeted operating level are the same. What does it mean? This data is also for the 10,000 and this data is also for 10,000. Even though this line is not mentioned, then also we will believe same. Further, actual and standard rate of the material procurement and hourly labor rate are also same. What does it mean? It simply means that there is no price variance. There is no rate variance. There is no material price variance and no labor rate variance. The difference in the cost, what should be and what is, only on account of utilizing more material or more number of hours. Hence, the reason is material usage variance or the labor efficiency variance for the more spending. Okay. Any variance in the cost is solely on account of difference in the material usage and the hour required to complete the production. Likewise, what we already understood. Aggressive pricing from the competitor has driven down the sale. It means the competitor are keep on selling the product at the low value or a low price because their cost is low. Hence, it is resulting in the dip in your sale. Dip in your sale means dip in the sale of Storewell Industry Limited. A comparable rack is available in the market for the 675 rupee each. From here, it must be clear to you, it is a question of target costing. What is your price right now? 750. What is the competitor's price? 675. Now you need to reduce the price, obviously. This is going to be the question for you. Let's read further. The Vishal, who is the market manager, has determined that in order to maintain the company's existing market share of the 10,000 rack, the Storewell industry must reduce its price also to the 675. Obviously, what we understood from the previous line. Now read the requirement along with me. The first requirement, calculate the current cost. We already computed, it is a 615. Identify the non-value added activity. We already discussed that the machine setup is a non-value added activity because it is not directly adding any kind of a utility to the product, although it is essential prior to producing the product on the machine, mechanical assembly. It is important to set up the machine, but we need to focus on this particular cost. We can eliminate this if we if we apply the 5S. We can do the setup while you can say that shift changes, and we can identify some other alternate for this as well. Okay, now read the second requirement. Calculate the new target cost per unit for the sale price of 675 if the profit per unit is maintained. What is your current profit per unit? Friends, answer me. What is your current profit? 135. And you wish you must keep on earning the same profit. But your price must be 675. So what is your target price or market-led price? The target price is 675. And you wish to earn the profit of desired profit 135. Hence, the cost which is available to you, in which you need to produce the product, which can be set target cost, is 540. I hope it is clear to you. Read the second requirement again with me. Calculate the new target cost per unit for the sale price of 675. We took the sale price here, 675. If the profit per unit is maintained, we maintain the same profit what we are already earning, that is 135 and a 135 here. Hence, we need to produce it at 540. Now read the third requirement along with me. What it says, recommend what strategy the store well industry should adopt to attain the target cost calculated in two above. What are the possibilities? Okay, friends, I must tell you one layman technique answering such a question. If someone asks you how to reach to the target costing, although it's not a professional way, but it's a layman way. If you don't find any apt answer, you can use this. Start analyzing all the cost category. Can we reduce material cost? Can we reduce labor cost? Can we reduce machine setup time and reduce its cost? Can we reduce mechanical assembly time and its cost? This can also do. And in this manner only the answer is written. But what else you can do? What is the other alternate way, which is a more professional one? You can also quote the various reason and their elimination. Likewise, what? The first thing which you can quote, we will focus on wastage. Yesterday, I asked this question, how you will reduce the cost? Then not yesterday, day before yesterday in the previous class, I asked this question, how we will reduce the cost? I still remember one student from Tamil Nadu, I forgot the name, and another student from the Mumbai, I remember the name, Deepa was the name, answered, sir, by removing the wastage, we can reduce the cost. Yes, you were absolutely right then, but your point is very much relevant here. How we will try to reduce our cost from 615, what we are incurring currently, to the 540, we will focus on the wastage. And where there are the wastage, let's consider the wastage in the given question. Okay, I'll change the color of the pen so that you can differentiate. How much of the material you are supposed to use? 5 lakh square foot. But how much of the material you are using? 5,20,000 square foot. So friend, you are using 20,000 square feet more, which you are not supposed to use. Agreed? This 5,20,000, if cost you 20 lakh rupee, what is the cost of this 20,000 which you are incurring extra? The cost of this 20,000 is 76,923. 76,923. Please understand this once again along with me. How much of material you supposed to implement in order to make 10,000 rack? 5 lakh square feet. But how much actually you used? 520. Okay, so 20,000 square foot you use extra. If the cost of 5,20,000 is 20 lakh, what is the cost of 20,000 square foot? It is 76,923. Hence, by eliminating material usage variance, which is adverse for you, you can save the 76,923 rupee, with which you can reduce your cost. Further, second wastage is what? Labor hour. You need to be more productive. The thing which can be completed within the 90,000 hour, why are you spending 1 lakh hour? Hence, the 10,000 labor hour extra spent. And what is the cost for that? 10 lakh is the cost for the 1 lakh labor hour. 10 lakh is the cost for the 1 lakh labor hour. It means 1 labor hour cost you how much? 10 rupee. And you are spending 10,000 labor hour extra. It means there is a scope of saving 1 lakh rupee here. There is a scope of saving 1 lakh rupee here. Further, at what you can target apart from the waste, you can also target on the design. These three things you need to quote always when there is a question from the target costing and you need to reduce the cost. You need to focus on the design, the processes, and the material. I will write here. Okay. Which material? Raw material. Friends, understand one thing here. Whenever we use the word material, it's always a raw material. Whenever we use the word product, it's always usually a final product or a finished product. Okay. So what you can do, you can focus on the three things: the design, the processes, and the material. We'll discuss one by one. What does mean by the design? Can we change the design in order to reduce the cost? Can we change the design of the rack in order to reduce the cost? You need to quote this thing that design can be focused. We can reduce some feature. Further, the material. Can we use some standard material? Can we ask the supplier to reduce the cost? This can be one of the way. Third thing, the processes. Can we eliminate some process? In the processes, you will discuss further two things. What are the two things which you will discuss? You will discuss the time spent on setup and the time which is spent upon assembly. That which time you can reduce out of these two. Obviously, we already said the setup time is entirely non-value added activity, hence need to be reduced. But whereas mechanical assembly cannot be eliminated, but we can reduce some time if possible. We must try to, because you can see here, out of the total cost of 60, out of the total cost here of 61,50,000, the 30 lakh is the cost of the mechanical assembly. The mechanical assembly costs you around 48.78%, which is a major portion of the cost. How much? 48.78%, which is a major portion of the cost. Okay. It may be possible that you can save some of the costing. Okay. With this, we wind up this particular question. We move to the next question. Next question we'll surely do on a whiteboard because it's a bit tricky one. And it was asked in the previous examination. Afterward, this we'll take a break. Okay. Then we'll move to the life cycle cost. Friend, this question was asked in the November 2018 attempt. The question was question number 2, and it was asked for the 20 marks. Okay. Let's start reading the question along with me. Gen Limited forms a committee consisting of the production, marketing, and the finance director to prepare the budget for the next year. The committee submitted the draft budget and detailed below. So the draft budget says that sale price will be the 50, then the direct material cost will be the 9, the sale price will be 50, the direct material cost will be the 9, and then the direct labor cost will be 9, and the variable overhead will be the 6. So very important information is given. What it says that you will take 3 hours to manufacture a product and the variable overhead per hour is ₹2. Can anyone tell me how much labor hour then we require in order to manufacture one product? It is very clear. If the overhead is for the 3 hours, then the labor is also for the 3 hours. I hope it is clear to you. Agreed? Now, we need 3 hours to manufacture the product and we are making the payment of ₹9. Obviously, then what is the per hour labor rate? The per hour labor rate is ₹3. Is it clear to everyone? Those, my friend, who are online, if it is not clear to them, please revert back quickly. I hope it is clear that how we compute the labor hour and the labor rate. It is given here, the variable overhead is charged for the 3 hours. If the variable overhead is charged for the 3 hours, it means it took the 3 hours to manufacture the product and we are making the payment of ₹9. It is budgeted. It's budgeted by this particular committee that it will took us the ₹9 on account of the labor cost. It means what is the per hour labor cost? The per hour labor cost is ₹3. I hope it is clear to you. Moving further, the contribution is 26. How this 26 is computed? 50 minus these three. These three comprises in totality to rupees 24. Further, the budgeted sale quantity was 25,000. The budgeted contribution 25,000 unit into 26 rupee of contribution is 6,50,000. The fixed cost budgeted is 5 lakh rupee. The budgeted profit is 1,50,000, which is nothing but 6,50,000 minus 5 lakh rupee. The management is not happy with the budget which the committee prepared. It is almost equal to the previous year profit. Why the management is not happy? Because management is saying that 1,50,000 is a profit which we already earned in the previous year. There is no increase in the profit. So therefore, it asks the committee to prepare the budget with the help of which they can earn 3 lakh rupee. So now you need to improve your profit from 1,50,000 to 3 lakh rupee. Obviously, you have a two-way. One, increase the revenue. Second way, to reduce the cost. If they ask to reduce the cost, obviously it will become the question of target costing. Further, to achieve the target profit, the committee report back with the following suggestion. What is the first suggestion? Rajin, please read along with me. The unit selling price should raise to be 55. Friends, the price will now be 55 instead of 50 here. Okay. Further, the sale volume will be increased by 5,000 unit. Earlier we are selling 25,000 unit. Now how much unit we are planning to sell? We are planning to sell 5,000 unit more, means in totality we are going to sell the 30,000 unit. If we are going to sell the 30,000 unit and the price of each unit is 55, can anyone tell me what will be our revenue? 30,000 and 55 is the price. What will be the revenue? The revenue will be 16.5 lakh, 16,50,000. Okay. This will be my revenue. Now, company wish to earn the profit of 3 lakh rupee. It means company need to manufacture these 30,000 unit within how much of the cost? The cost of producing 30,000 unit must be 13,50,000. Okay. I hope you got the point here. We increase the sale price to 55. We increase the number of units sold to 30,000 from 25,000. Hence, our revenue improves to the 16,50,000. But what the management desire? Management wish to earn 3 lakh profit. We reduce the desired margin. Hence, we reach to the target cost. The target cost is how much? The target cost is 13,50,000. Okay, move to the next information or the other information which is given in the question. Now what it says, to attain the above increase in the sale, you need to spend 40,000 on the advertisement. Okay, so there is an increase in the cost. Further, the production time per unit should be reduced. Hence, there is an reduction in some amount of the production time as well. Obviously, we need to reduce the production time. We need to quantify that how much of the production time we'll see. Further, to win the acceptance of the worker in this regard, hourly rate should increase by 3 rupee beside an annual group bonus of the 30,000. Very, very, very important. Very important. What is the current rate, friends? The current rate is 3. We are going to enhance the rate by another 3 rupee. So now what will be the hourly labor rate? It will be 6 rupee. Apart from that, we also pay the group bonus of the 30,000. Further, there is no change in the amount and rate of other expense. It means material expense remains same. It will be 9 rupee per unit. Okay. And fixed Overhead will also not change. It will be remain the 5 lakh rupee, which was given on the table on the previous page. Further, the company has sufficient production capacity. It means company can produce 5,000 additional unit easily. It need not to incur any capital expenditure. Further, as implementation of the above proposed need the acceptance of the workforce to increase the speed of the work and to reduce the production time per unit is required. The board want to know the extent of reduction in the per unit time. This is what we need to compute. Friends, the material cost is not gonna change. The fixed overhead not gonna change. So what you need to do, you need to change the labor cost or the variable overhead. And how you can change these? By reducing the hour required to manufacture the one product. Currently, we require 3 hours to manufacture the one product. If we can reduce those 3 hours, we can save some time. Although we cannot reduce the labor rate is increased from 3 rupee to 6 rupee. Agreed? Now quickly read the requirement along with me. What are the requirements? The first requirement, calculate the target production time per unit and the time to be reduced per unit. So what you need to do, you need to tell, currently we are manufacturing each unit in 3 hours. In how many hours we need to produce unit now? Okay. Read the second requirement, identify the other problem that may arise. One problem is clearly mentioned in the question itself, that we need to take the consensus of the laborer. Apart from that, what will be the other problem? That I discuss now along with you. What will be the another problem, Rajan? Obviously, if we are presently manufacturing something in the 3 hours, now we need to produce it some less time, less than the 3 hours. We need to change our processes. We need to change our plant layout. But what we learned up till now that the cost is committed during the design phase. If once you entering into the manufacturing of the product, where the design of the product is already finalized and the design of processes are already finalized through which the product will manufacture, later on it will become very difficult to change those processes because you already had a machine which will let you spend 3 hours in order to manufacture the product. Now, how you can change the layout of the machine? How you can change the layout of the production flow? So these are some critical features upon which you need to be focused. Further, state the most suitable situation for adopting the target costing. Raja, we already answered this particular question, that what are the suitable stage to implement the target costing. In the start of the lecture itself, that target costing is usually applicable where the product major life cycle cost is locked in during the design phase, where there is an assemblies, where there is an different multiple range of the product, where there is a large use of the machine, scientific production is there. So that we already discussed in the notes itself. Okay. We discuss it in the note number. I will quote it for you. We discuss it in the note number 15, 15A and 15 and a 15A. Okay. For this, from the notes, you can refer 15 and 15A. Okay. Now we'll move on a whiteboard in order to solve this question. I believe that the facts are in your mind. Otherwise, you are having this particular question. Or what you can do, you can click the screenshot so that you can refer the term along with me. Okay. Gen Limited, and this question was asked in the November 18 exam for 20 marks. Okay. Now quickly solve the question along with me. The first working note. What is the revised labor hour? The 3 rupee is the existing labor hour you are making payment at the 3 rupee per hour. Now you said we'll pay another 3 rupee. Hence the revised rate will become rupee 6 per hour. Okay. Working note number 2. What is your target cost within which you need to produce the product? Firstly, identify your target revenue. What was your target revenue, friends? It was said in the question that you will sell 30,000 unit, and that is at 55 per unit. So your target revenue is 16 lakh 50,000 less desired margin. How much management wish to earn? The management wish to earn 3 lakh rupee. What is the target cost? ₹13 lakh 50,000 rupee. Now moving to working note 3. Some of the costs are fixed and not going to change, like the material cost. What is the material cost? The material cost is 9 per unit. It is given in the table, and you are going to manufacture how many units? 30,000 units you are going to manufacture. Hence, your material cost will be 2,70,000. Okay. Apart from the material cost, the budgeted fixed overhead is also there, which is fixed, and that is of the 5 lakh rupees. Apart from that, you need to do the advertisement because you are going to enhance the volume of the sale from 25,000 to 30,000. To enhance the sale of the 5,000 product, there is additional advertisement cost. And what is the additional advertisement cost? That is the 40,000 given in the question. Now, annual group bonus, which you will give to your worker. How much annual group bonus you need to give to your worker? That is 30,000 given in the question. And apart from that, there is labor cost and there is variable overhead. But both are depend upon number of hours which we require in order to manufacture one unit. And the number of hours are not given to us. We need to compute what will be the new number of hours. The total cost should be 13,50,000, out of which this much cost we know. This cost we need to compute, or we need to, you can say that, make the calculation for this. So let's compute the balancing figure as the total for labor cost and the variable overhead. I will repeat again for you friends. We need to produce 30,000 units in 13,50,000 rupee. On account of material, we already commit 2,70,000. Fixed overhead is fixed at the 5 lakh rupee. We commit the advertisement cost of 40,000. We commit the annual group bonus of the 30,000. Now, the amount which we can spend in form of labor cost and the variable overhead, maximum up to how much? The difference between the sum of these four and 13,15,000 rupee. What is that amount? That is 5,10,000 rupee. Okay. How we compute this? This is nothing but the balancing figure. How we compute this? This minus this. In this manner we compute this. Okay. Now move further. By incurring 5,10,000 rupee, how much of the product we need to manufacture? 30,000 unit we need to manufacture. It means the labor cost and variable cost in totality will be 5,10,000. What will be the labor cost and the variable cost per unit? The labor cost and variable cost or variable overhead per unit will be 17. 5,10,000 divided by 30,000. It will be 17 per unit. Can anyone tell me what is the per hour rate? The revised labor rate per hour is 6 and the variable overhead per hour rate is given to you in the question itself 2. So the revised combined rate of the labor cost and the variable overhead is how much? 8. And in order to manufacture 1 unit, you need to incur 17 rupee 1 and 7 on account of labor cost and the variable overhead. So how much hour? This will be your last working note. Hour need to spend to manufacture 1 unit. What is the labor cost plus variable overhead cost per unit? 17 rupee per unit. Okay. And what is the per hour rate? The per hour rate is 8. If you divide 17 with the 8, it will give you 2.125 hours. Hence, instead of producing 1 unit in the 3 hour, you need to produce the unit in 2.125 hours. Okay. So this is the answer. What was the second part? What will be the problem? The problem is this: if you need to produce the product which take 3 hours to manufacture, you try to produce that product in the 2.125 hour. Obviously, your processes need to be improved, but the layout of the plant is already designed. How you will change that? So it will put unnecessary pressure on the designing team and engineering team to reduce the cost. Agreed? Now, friend, I'll give you 2 minutes to ask your queries on the target costing on the 2 questions which we covered, and then we'll take a break for the 5 minutes, and we'll come back and then we'll start the life cycle costing. Okay. I'll give you the first 2 minutes. If you wish to ask anything, those friends who are online, please quickly ask the queries. Okay. Note it down or take a screenshot of this. Okay. I'll be waiting for your queries, friends. Please keep on asking the queries. Jo bhi aapki ho. Okay, friends. Right now it's in 7:50. We'll meet back at the 7:55. We'll take a 5-minute break. We'll meet at 7:55. Okay. Uh, I feel you all are refreshed after a break. Okay. So friends, we need to now start another topic under the chapter number 4 itself, the life cycle costing. The chapter is important. I'll show you the various questions which has been asked from this particular chapter. Okay. So you can see this Excel file once again along with me. We already solved these 6 questions, the Storewell, Zen Limited, Pixel, KTC, Kaveri, then Queenstown, the 2 purely on the numerical basis, the Pixel and the KTC, then 2 case-based numerical, and the 2 which are the case questions. Okay. Now, friends, we move into the life cycle costing. There are the 5 questions. 2 questions are such which was tested in the previous examination, and you can see the November 2018 question 1, 20 marks asked from the life cycle costing, and November 18 itself, the question 2 asked from the this target costing. So this is very important chapter from the perspective of examination too. Okay. So what we'll do now, we will read the notes as well as explaining the concept side by side. Okay. Now please allow me so that I can take you to the notes for the life cycle costing. Okay. I hope the notes are visible to everyone. Okay, friends, let's start learning about life cycle costing. Friends, I surely believe you all acknowledge this fact that nothing is immortal. Everything is immortal. Any product, be it a good or a service, has a limited life, defined life, not having the infinite life. The Facebook, which replaced the Orkut, later on itself replaced by the WhatsApp. The mastic, which we try to use in our kitchen or earlier used in our kitchen to light up the gas, replaced by the lighters. Hence, the product has a life cycle. It may be possible that some of the product has a larger life cycle, whereas some other product has a small life cycle. But every product has a life cycle. There is no doubt in this. Agreed? So we need to acknowledge the thing which is mentioned in the board, that every product has a life cycle. So it is important that we control the cost that will be incurred over the product life cycle. To control the cost which we will incur over the product life cycle and to ensure the profitability, the technique which we have is known as life cycle costing. So life cycle costing is a system that identify and accumulate the actual cost that we incur over the phases of the life cycle, corresponding revenue on a particular cost object. Okay. So what is the life cycle cost? First learning for this particular topic. What is the life cycle cost? The cost we incurred over the life of the product. Okay. Second learning. What is the life cycle costing? Life cycle costing try to improve the profit, try to maximize the profit. How it will try to maximize the profit? By controlling the cost. How it will control the cost? How it will reduce the cost? It will identify the cost and accumulate it It will study the pattern that how the cost will change when the product is in introduction phase. R&D cost may be more, the marketing cost may be more. In the growth phase, production cost may be more because the product is selling in the mass. In the maturity phase, the another form of cost may be more. So it will keep a close eye on the nature of the cost, as well as try to reduce and control the cost in order to ensure that product must be profitable during its entire life. It may possible that if the product having a life cycle for the 20-year, for the 2-year, the product is not beneficial, and then for the remaining 18-year is beneficial. But only considering the first 2-year, initially, we leave the product. So the life cycle costing help us to overcome such a kind of the limitation of the financial analysis. Okay, so this is the utility of life cycle costing. Once again, we are going to revise the life cycle costing. What is the life cycle costing? Life cycle costing is a system which help us to identify and accumulate the cost which we are going to incur over the product life cycle, so that we can control that cost as early as possible in order to enhance the profit. It means life cycle costing is also linked with the target costing as well as the value engineering and the value analysis. We try to perform value engineering at the design phase so that we can control the cost at the manufacturing phase. Agreed or not? We will keep on doing the value analysis during the entire life of the product so that we can keep on identifying what are the activity which is not useful now. We can eliminate those activity and can reduce the cost. Agreed or not? Now moving further, the second point which we need to learn, the product life cycle. You all know that each product has the 4 phases. The first phase is introduction, when the product is introduced in the market as a new product or as an advanced version of the existing product. Like the iPhone is not a new product, iPhone 10, iPhone 11. It's an advanced version of the existing product. It may be entirely new product. It may be the extension of the existing product, like the other variant of the Maggi noodles by the Nestle. It may be possible. It may be entirely new product. Okay. Then the growth phase, when everyone knows the product is now not a new product, is selling in the mass. There is a large quantity which is demanded by the customer, and the company are earning the good, huge profits. Then there is a maturity, when the sale is at the peak. Okay, at the maturity stage, the sale is at the peak. Then thereafter decline, when the sale start reducing. Friend, I'm expecting a case study in the upcoming examination where you need to identify these phases based upon data given for any product. That's why in this notes on the page 4, I include a case study on the Maruti. You can refer that. It's very important. Okay. But coming to our discussion, is it necessary that every product will pass through these 4 phases? Yes, it is very much necessary, or very much you can say that true, that product will pass through these 4 phases. What will be the length of these phases? It will depend upon the nature of the product liking by the consumer, and the market condition. It may possible that car of a particular automobile company remain in the growth phase for 20 years, like the Maruti 800. But a car from another automobile company may not enjoy this much length of the growth phase. So it may possible that the duration of these phases may not be same within the product, and the introduction phase or the growth phase may be different for the different products. The length may be different for the different products. There are 2 understanding we are taking. First understanding, the length of introduction phase may not be equal to the growth phase. This is our first understanding. The second understanding, it may possible that the growth phase of 2 car by 2 different automobile companies may not be same. Agreed? So every product which will be launched in the market once will be eliminated from the market. So every product has a limited life in the market. Number one. Number two, the product has a 4 life cycle. The first one is introduction, second one is the growth, third one is the maturity, fourth one is the decline. The duration of these phases may be different per se, and the duration may be different in the different products. Now, one important understanding which need to be inserted in the study text as well, that these phases are according to the marketing of the product, not according to the product development. If you consider the product development, then there is another phase where we design the product. So for the purpose of academics, and even though in writing the exam, we will also say there are 4 phases only, but in practical, there are 5 phases when the product inside the company, when we only incur the cost to see its market feasibility. Even though after finding the market is feasible, after develop, you can say that conduct the initial research, when the product even enter into the development phase, still it remain within the factory. So we, being a technical background people, understand there are 5 phases: product development, introduction, growth, maturity, and decline. But for the academic purpose, we'll say that there are 4 stages. The first phase will be the introduction phase, then the second will be growth, and then maturity, and last one will be decline. Mind it one point more. This phase is very much important because here we will finalize the design, how our product will look like, what feature it will carry, whether it will be TFT screen if we are the mobile phone manufacturer, what category of the speaker it will be, what will be the touchpad utility, or what are the other feature. So the cost is committed at this phase only, although it will be incurred when you are manufacturing the product over the different phases. Okay, but it is committed here, and this phase is very much important from the perspective of cost control. If someone try to control the cost which the company is going to incur over this life, then what that person need to do, that company need to do, that company must engage a good cost reduction team, a good cross-functional cost reduction team here itself, at this phase itself, so that you can design the product and processes in such a manner that you can reduce the overall cost. Okay, so I believe the note 1 and 2 both are clear to you. Okay, just give me a minute. There is a query from the Chennai. Okay, the product life cycle costing applicable only to the manufacturing industry. Yes, Rajay, you can say it is applicable to the manufacturing industry largely, but it is not true. Even though it is applicable to the product which is not tangible in the nature also, the utility of those things also reduces. They also lose the market. Why we study this particular thing? Take an example of some app. Someone develop an application, a gizmo application, mobile-based application. Okay, app. Someone develop an app. Obviously, while developing the app, he incurred the expenditure. Then he launched the app. It's an introduction phase. He spent the on the advertisement, where the everywhere that app was advertised. Like, even though you can take example of some mobile game, PUBG itself, even though, although I'm not knowing the functionality of that, but we can take example of that. So it was in an introduction phase. It start capturing the market. The other games or the apps start losing the market. Then there is a growth stage when everyone is aware about the product. Keep on installing the app. The number of the install of the app or the reviewer keep on increasing. This is a peak level, and then it may possible that it loses the attention of the customer. So it is quite possible that it's not only the manufacturing. No doubt your point is good. Okay. Largely, it is applicable to the manufacturing, but it can be applicable to the other two. Okay. Moving further, friends. Now, in order to, please listen this very carefully. Now, in order to classify the phases, in order to identify that the first phase finished and we enter into the second phase, the introduction phase is finished, we enter into the development, this growth phase. The growth phase is finished, we enter into the maturity phase. What technique we use? We'll see these feature of the characteristics. These characteristics tell us now the first phase is complete. Now we enter into the another phase. Now the one phase is over. We enter into the another phase. Okay. And these are the strategy, the possible course of action which we can apply. Let's read the feature of the introduction phase firstly. High distribution and promotional expenditure. Obviously, product is new. Hence, we need to focus on the promotion. We keep on telling that this is a new product and this can render this of the feature and other thing related to that. Further, the profit are low or a negative. Why the profit is low? Because you are selling less number of units. Since you are selling the less number of unit, hence your overhead cost per unit is high. Hence, you are not able to earn the profit margin which is desired. So your profit is either low or there is no profit at all. Further, the low initial volume of the sale. Obviously, the product is new. Only the innovator customer ready to buy the product. All the customers are not aware and they are not, you can say that ready to take a chance on your product. They are with some sort of resistance. They don't wish to change sometime. It may possible that things are entirely different to this. In case those products where there is a high catchiness in the product, like some iPhone is launched, the people are mad about that. Okay, so it may possible as well. But what we are studying here, we are studying if the product is entirely new launched in the markets in the introduction stage. Further, attracting the various marketing channel. You are looking for the distributor or the retailer who can sell your product. So you are looking for the market channel through which you can reach to the customer. You are looking for the space in the retail showrooms. Further, awareness about the product is quite low. People are not knowing the product well. You need to give them the demo. Although you need to give them the demo, this will come in the strategy. We are discussing the feature here. What is the feature? Awareness among the people is known. How you can enhance the awareness? By giving them the trial, by giving them the demo. Further, few competitor. Why few competitor? Because the product is new. People are not ready to buy. Hence, only few competitor willing to manufacture this particular product. Okay. The basic version of the product we are selling. The product refinement is not possible. Why the refinement is not possible at this stage? Because we are not get the feedback, true feedback. Earlier, if we conduct the market research prior to launch the product, that is good. We should do that. Even though in the target costing, we suggest that we must conduct the market research. But then entire thing is in, you can say that futuristic. We ask the customer which kind of the pencil you love to use. The customer say, okay, it must have a multiple color. The neon outlay may be good and this thing and other thing. But once he used, only then he can give the correct feedback. So the you can say that refinement of product is not possible. We are selling the basic version of the product. Then further, innovator customer buy your product, which are few in the number. There is not a large number of the customer who are ready to buy. So you need to focus only on these customers who are willing to shift to your product. Further, the short production. And what does it mean? The batch size. Batch size is less. You are not manufacturing in the bulk. You are not manufacturing in the mass. You are producing less quantity because there is a less demand in the market. Further, the non-standard technology. Why non-standard technology? Because data is not much available in the market. Hence, one manufacturer is not knowing how the another manufacturer is producing this thing. The moment we enter into the growth phase now, people will know, okay, this manufacturer is doing this thing and this manufacturer is doing this thing. It means they keep on doing the reverse engineering the moment they enter into the growth phase. What is the reverse engineering? Taking the competitor's product, dismantle it and learn how it was manufactured. It means at the introduction phase, the technology usually non-standard. The technology is not standard one because we keep the scope of minor changes based upon the feedback, number one. Number two, the technique used by each manufacturer is different. What are the possible strategy? Product is basic product only. We keep on deciding the feature, what should be packing, and the other thing, we are considering the primary factor about the product. Okay. Further, how we can attract the customer? For attracting the customer, we can do the aggressive promotion, give them the trial, the demos, and try to build a brand. Inducing the customer to try and buy. You might notice in the malls, on the various places, other as well, where the public usually move, the head count is high. The person or the companies who launch the new product, they ask their sale representative to stand and ask the people to try the product, to taste the product, to have a kind of a demo of the product. So do this thing. And the one who is ready to taste your product, obviously he will buy your product. The one who ready to try your product, may possibly he will buy your product. So focus on that particular person. Okay. Your focus should not be mass focus. Your focus is on bringing the awareness about the product. Apart from that, you must try to, you can say that you must try to pursue those customers which are willing to take a chance on you. Okay. Further, the distribution. Distribution means supply chain. Build the selective distribution. Don't ask every retailer and the trader to keep your product. And don't block much of the inventory at the distributor level or the retailer level. Okay. Keep sending inventory to them at the slow pace. If you are establishing your own stores, be selective while identifying the locations. Hence, you need to be selective while selecting the distributing channel, while identifying who will be the best distributor for you. But you keep on strengthening and expanding the channel. What does it mean? Try, explore that who is the best distributor for your product, through which you can distribute your product to the various retailer. Okay, try to develop the supply chain relation with the various distributor and the retailer. See who is distributing the competitor's product. What is this strategy? Your competitor's product is distributed by which manner? Okay. Further, the target reach. Target reach means you are focusing on which thing? You are focusing only on this thing that your product must be visible in the market. There must be availability. If someone willing to buy, he should not have a bad, bitter first experience. He must have a good first experience. Okay. The price, it depends. If your product is a technology product where a high R&D is involved, the price scheming can be done. Please focus on it. Price scheming can be done if the product involves high R&D cost. It is a technological product. iPhone comes, the new version, it's a costlier. Afterward that it becomes cheaper. It's a price scheming. Earlier higher price. Once it's spending the time over the product life cycle, the price start declining. Agreed? Against to that, it might possibly that you are charging a very low price. If nothing is, you can say that visible to you in the market, there is no competitor, the product is entirely new, the customer are not very much aware about the product, the feedback is not available to you. What best you can do? Charge cost plus profit. But this is only if nothing is available to you, you are not knowing the customer preferences, or no competitor is selling this particular product or the similar product in the market. If the competitor is selling, like Yappy come to the market and Maggi is already in the market, so Yappy could not charge more than the Maggi. Otherwise, it will not launch its product itself into the market. If the Nestle launch another sort of the Maggi, like the Maggi atta noodle, apart from the Maggi normal maida noodle, so what it will do, it can keep the price 1 or 2 rupee up or low, not a much change to that. Hence, it might possible that you are only launching the advanced version and some competitor is also there. So it will become a guiding force to you. But if the competitor is not there, then obviously you can rely upon the cost plus this margin for some time. When the competitor will come, then you need to move to the target costing. Obviously, you can't charge more than your competitor, otherwise you will be thrown out of the market. Then you need to shift from the traditional costing to the this target costing. Okay. Now move to the friends growth phase. We are studying the feature. In the introduction phase, we keep stressing on the promotion. In the growth phase, we continue the promotion, but the model changes. Earlier, we are doing the promotion to bring the awareness. Now we are creating the brand. Now we are not saying that it is essential to use the product. What we'll say, use our product, because competitors start coming to the market. Take an example. Some company is making the sanitizer. Prior to COVID, no one demands that. The COVID comes, company who are manufacturing the sanitizer and the company who are not manufacturing the sanitizer, they start manufacturing the sanitizer. So the company which earlier manufactured the sanitizer, they try to promote using sanitizer is good hygiene habit. But now they need to change their strategy. Rather than saying it may save you from the COVID or it is a good habit, what they need to say, buy ours. Ours is better than the others. Okay. So your promotion style may change when you shift from the introduction phase to growth phase. In the introduction phase, you're telling about the product. In the growth phase, you're telling about the company, so that brand loyalty, customer loyalty can be created. Till the maturity phase, the customer will buy from you. Okay, now read the another feature. What is the next feature? The next feature is the bottom line. Bottom line means the profit turns green and keep on rising. Earlier, the profit was not there or low there. Now the profits start increasing. This is the differentiation between the introduction phase and the growth phase. Further, increase in the sale volume. The sale is also going to increase, but whether with the increasing rate? No. The moment you enter into the growth phase, the sale will increase at the increasing rate. But moment you spend some time in the growth phase, now you are moving towards the maturity. The growth rate declined. Mind my words carefully. The sale keep on increasing, but the rate of increase will come down. So there is increasing trend, but the trend itself is not uniform. Okay. Further, the product awareness to the product conviction. Further, new competitor entered into the market. Obviously, now the market is growing. So everyone wish to earn some profit. They wish to sell the product, make some good money, improve the product, because based upon the feedback of the customer, you add some feature. So this is very important. It means you done the value analysis. You understand what are the function important. Functional analysis. You perform the functional analysis, then value analysis to understand, okay, this function is very much important for the customer. So we are going to add this particular feature, because obviously, if you are adding that feature which add the value to the customer, you can also increase the price. Okay. Further, the customer are early adopter, although it's not a stage when they are the innovator. Now everyone know about the product, but still the customer who buys your product, they are the early adopter. Okay. At the introduction stage, they were the innovator. Only those who love to take the risk, they are the person who buy from you. And at this stage, only those person buy from you who are the early adopter, who moves ahead of the majority. But these are not the innovator. Okay. The average cost per customer reduced. By why it is reduced? Because there are more number of the customer who are buying the product from you now. The mass production. You can see earlier it was less or the small batch size. Now the batch sizes are mass, large. You are producing in the quantum. You are enjoying the economy of scale here. That's why your cost reduces and the margin enhances. Further, the range of the technology narrows down. Why the range of the technology narrows down? Because now the manufacturer are also aware how this product is manufactured. And they are also knowing the best way to manufacture the thing. Okay. Merger and takeover is the best way to overcome the market. Sorry, friend, here you need to add one word, market competition. Actually, while typing the notes, I might forget to write it. market competition. Okay. Overcome the market competition and enhance the market share. So it's the best that you must do the horizontal merger and capture your own competitor. Okay. And in order to reduce the cost, you can also do the vertical merger. Although diversification is not required at this stage, it is required only when your product moves into the maturity stage. When you find that your product slowly becoming the cash cow, you need to develop another product, or you need to acquire some another company who is selling the another product. Then you will go for the diversification, the conglomerate mergers. Okay, at this stage, horizontal merger is the best thing for you. Now coming back, the various strategy available to you. One strategy we need to read on a previous page. What is the overall strategy? When your product is in the growth phase, the overall strategy is trade-off between the high profit or the market share. Friend, you have a two option. What is the first option? The first option is this. You can sell more number of unit at reasonable price, or you can keep on following the policy of the price scheming. You can continue charging the high prices. So either you can reap the profit, or you can build the clientele, you can build the customer base and keep on selling up till the maturity. The decision will be based upon this fact, what is the approach of the company, the long term and the short term. Obviously, building the high market share is a good approach, but it's not good always. When the product is small, when you can say that product utility is small. Take an example of this N95 mask, or take an example of the company who are manufacturing this sanitizer. The utility is only for the time period till when the corona will be active. The moment medicine will come or any vaccine will come, there will be no utility. So rather than thinking that we must buy the high market share, we must build the customer relation, you may go for this high profit approach as well. Okay. What happened to such a kind of a company? They directly move from the growth phase to the decline phase. They rarely see the maturity phase, those who keep on earning the high profit. Okay. Because they are not building the good customer relation. Further, the product. Obviously, we study here, you are keep on adding the few features. So hence the product extension is there. You are adding some feature, some services, some warranty in order to enhance the customer experience, in order to enhance the customer's satisfaction. Okay. You might remember 20 years ago from now, although you all are younger than me, but I still feel that your age may be between 22 or 24 or 25. Okay, maybe in some cases more than that or less than that. So what I feel, friends, that when you are too young, in your childhood, when the telephone, the line connection telephone was installed in your home, is waiting for the telephone. You will have to apply for the BSNL and MTNL that we need a telephone, and then they ask, okay, wait for a month or two, then your connection will be allocated and you will get the connection. Similar was the case for the gas. But now what happened? You ask for the phone. Despite even though you ask for the phone, you think in your mind that you will apply for another connection. Then immediately you got a call from the call center or the service center or the sale representative that we are ready to sell you the mobile cellular services. So you can see this change. With the moment some industry matures, with the moment some product move into the growth phase, some industry matures, this feature is very quite often that we try to add up more number of features possible so that we can keep on tempting the customer. Otherwise, the customer will move to some other product. He will try to, you can say that, taste the other product too, and his preference may change. Further, the relationship market will try. We try to build the relation with the customer so that till the maturity, he will keep on buying us. So hence our focus, the focus of our advertisement is on building brand rather than creating the awareness about the product. Distribution, build the intensive distribution network. Why? Because at this stage, you need not to be selective. You have to sell the additional volume. So keep searching the new distributor and the retailer in the existing market as well as in the new market. Do the market expansion. You can link it with the Ansoff metrics. Do the market development. Okay. At this stage, you need not to do the product development. Product development you require at the stage 4, maturity. At this stage, you can do what? The market development. Further, target reach. While ensuring the availability and the visibility of the product in the existing market as well as the new market. So you must ensure that your product is available for the sale and it's visible too. Further, price. You have a 2 option: charging high price or charging the low price in order to penetrate in the new market and maintain or avail the higher portion of the market share. Okay. We are moving to the maturity phase and we'll understand the feature. What are the feature of the maturity stage or the characteristics of the maturity stage? The bottom line, which you can say that was at its peak during the growth, now it start declining. Okay. It will start declining, but it will remain positive. It will not touch to 0. It will touch the 0 in the decline phase. Okay. So the profit is not further increased. We, in order to maintain the turnover, keep on selling the product. The profits start declining, but still there is a profit, so we keep on selling. Okay. Rise in the sale volume. Despite you are not able to sell at the higher price, you are not making the profit. Your profit is not increasing. There is no incremental profit, but you keep on trying to sell more volume in order to capture the larger market share. Further, the shakeout leaves only the few large players. Obviously, when it is clear to the manufacturer that it's a maturity stage, now we can't enhance much of our market share and the profit is also declining. So there will be churn around in the market. Some of the manufacturer will think it's better to produce new product now. So they will move out and they will not producing this product. So maturity phase may result in the less competitive while you enter into maturity phase. Okay. Further, the standardization of product. Everyone is selling almost the same product. There is a hardly any different because the benchmarking data is easily available. So everyone benchmark to the best. They need they reach near to the best available product in the market. Might not be, if possible, their product are identical, but their product will be similar. Further, the customer are the middle majority now. Now we are not customer centric. At the introduction phase, we are customer centric. At the even though growth phase, we are customer centric. We are taking the feedback and keep on adding the feature. Now what we'll say, we will not do any R&D expenditure anymore. We will sell the product as much as we can do. No doubt, we'll focus on our loyal customer, the niche market. Okay. Further, low cost per customer. Why low cost per customer? Because we keep on selling the product, we are enhancing the sale volume. Hence, it may possible that we are selling the customer to the we are selling the product to the new customer. Since we are selling the product to the new customer, hence the cost per customer will decline. Knowledge is well understood by the player in the market about the product, and overcapacity start existing. Please mind it, because at the end of the maturity phase, the sale start declining. It is not declined. Mind my word. There is a start seeing a dip. There is a signal of the dip. Hence, overcapacity start existing at the end of the maturity phase. Although this is a minor overcapacity, it is not a major overcapacity. The major overcapacity will arise in the decline phase. On this, institute asked the question. That's why I'm focusing on this thing. Even though when I'll move to the decline phase, I'll again repeat this point. Further, overall strategy is what? You will try to reduce the cost as much as possible and keep on focusing on the market share. The product, don't do any R&D much expenditure unless otherwise you can differentiate your product. If you can differentiate your product, earlier you are taking the advantage of early mover, then you take the advantage of cost leadership. If you can take advantage here of the differentiator, then do the R&D. Otherwise, don't do the R&D. There is no need. The product is in which form, that is a you can say that acceptable to us. Further, the marketing stress is on what, that we are a different brand, we are a better brand, our brand is better than the other, our product is a different from the other. So keep focusing on the difference, if any your product carries, if any your product carry. If your product don't carry any of a difference, then you need not to spend much on the marketing. Further, distribution, build the intensive distribution network, give the incentive to the person who are engaged in the distribution channel, give the incentive to the retailer so that he keep on selling your product rather than the product of the another manufacturer. The price, you can keep the price low in order to match the competitor price, in order to, you can say that, rely upon the target cost, in order to attain the target costing, because we said earlier this thing that only in the introduction phase traditional costing is fine, later on you need to move to the target costing. Okay, quickly move to the decline phase. What are the feature of the decline phase? The first feature of the decline phase is that profit declines to zero, even though it may move to negative. Now your question will be this: sir, if the profit is negative, then why we keep on selling the product? In order to have complete product range. It might possible some companies selling few product at the loss. Why it's selling at the loss? Because it need to maintain the complete product range. If they eliminate the production of this product, the sale of the other product may go down. So for few, not for a longer period, but for few period or a less period, for a limited period, this may be possible that even though a negative return generating product we keep in our portfolio, later on we'll turn around and we'll throw that product out, or we will change that product, we will replace that product with another product. Okay, the sale, the top line declines due to fall in the sale volume. Obviously it's a decline phase, so it's quite clear. Only handful competitor will left, all else will move out of the market. So there will be heavy discounting in the prices. You are not charging the MRP because no one is interested. The product is an outdated one. The new technological product comparing to your product is already launched in the market. Further, the product differentiation is of no importance, because at this product only those customer, at this phase only those customer buy the product who actually need, who are the laggard customer. They are not the innovator, they are not very much concerned with the feature, they are only price sensitive customers. So this thing need to be focused. Further, the low cost per customer is there. Technology become, why the low cost per customer? Because you need to cater the less customer. You need not to spend the R&D cost here because the product is declining. You need not to spend even though the advertisement cost in order to build the brand. No doubt you need to incur the advertisement cost in order to sell the number of the unit you capable of. Further, technology become absolute or the superseded, because everyone knows that, and there is a huge overcapacity. Please mind it. Here there is only the word overcapacity. Here there is a word of huge overcapacity. If there is a huge overcapacity, it means we are in the decline phase. If you can say the word is mentioned, there is a signal of overcapacity, then you can say you are in the maturity phase. Okay. Now move to the strategy available during the decline phase. The first strategy, overall strategy, is to harvest. You created the brand loyalty at the time when you are in the growth phase. Now it's time to harvest. Keep on selling as much as you see. Your product is now cash cow. It is not a star product anymore. Okay. Product. Either drop the product or do the product extension. What does it mean by product extension? Launch the product as a rebranded product or the renamed product, or add some feature and relaunch it. Okay. So this thing can be done. Further, the marketing, try for the revival. If of the product can be do by extended the length of the market. How you can do so? you can focus on the, you can say that your loyal customer. To them, you can keep on serving. Apart from that, it is not much beneficial to move into the new market. You need to enter in the new market in the growth phase. Okay. Further, the distribution. Again, go selective. Don't ask every distributor or the retailer to sell you a product, even though ask them to sell you a new product. Obviously, if your one product is moving to the decline phase, you are developing some new product as well. So you shift your focus to that. You can link this thing entirely with the BCG Boston Consulting Group. That product is a question mark, then it become a star product, then it may become a dog product, or it may move to the category of the cash crop. Further, the last point, the prices. The prices must be as low as possible. It's always better to keep the low prices in the decline phase, because you are only going to sell which are the price sensitive laggard customer, or you are going to sell your loyal customer, which say, okay, your product is no doubt old, but we feel that we need only this particular product. Okay, so you'll keep on doing this thing. Now we will quickly, friends, move to the case which was asked in the November 2018 exam. So this is a case study, Maruti. We'll surely discuss it if the time remain available to us. Otherwise, we'll discuss it in the next lecture. Okay. So this is the question which we need to solve. This question was, friends, asked in the November 2018, question number 1, and the question was asked for the 20 marks. Okay. The question name is JK Limited. What it says, the JK Limited is following the life cycle costing. Okay. JK Limited is following the life cycle costing. Its 4 products, P4, P3, P2, and P1 are in the market respectively in the introduction, growth, maturity, and the decline phases. The management want to analyze the marketing challenges faced by the product to take the strategically measure to stabilize the product in the market. So the management of the company is very much concerned that what strategy it follow depending upon the marketing challenges. Hence, you are obviously responsible to tell them the possible strategy. Let's read the question further in order to gain the best understanding that what we need to do. For this purpose, the board directed the secretary to get the product-wise report from the market chief of the each product. So the secretary may move to the product manager or the product chief or the marketing chief of the P4, P3, P2, and P1 and ask them, okay, what is the condition of your product? At which stage your product is moving, whether it's in the declining phase or the other phase. Obviously, market chief may be aware about these phases or may not be aware about these phases. So they will provide the data to the secretary according to their understanding on these phases. Further, the chief were asked to give the one characteristics possessed by the product because of which the product being classified into the respective stage. Friend, this is what we discussed, that the classification of the product into the different phases can be done based upon what? Based upon its characteristics. That's why to the marketing chief, we ask the characteristics, so that based upon the characteristics, based upon the feature, we can classify the product into the different phases. Although it's already mentioned to you that P4, P3, P2, P1 are in the introduction, growth, maturity, and decline phase respectively. Further, apart from that, to strategically measure to be taken to overcome the market challenges. Hence, we are taking the suggestion from the employees itself that what strategy we need to follow. The secretary received the report from all the chiefs and handed over to the computer operator to get it printed in the tabulated form. But the operator, without understanding the significance of the product and the phases and the characteristics and the strategy, mix all the 12 points. There are 4 phases. They ask for 1 characteristics and 2 strategy. So 4 into 3, the 12 point, 1 characteristics, 2 strategy, and the 4 phases. So there is a 12 points which the computer operator, you can say, merged and mixed and got it printed as a list below. So these are the 12 either characteristics or the strategies mentioned for you. Now what you need to require to do? Let's read the requirement. Okay. Complete the table given below by entering the 12 item under the appropriate category column. You need not to rewrite the item, just write the serial number. It means we need to do what? We need to write 1, 2, 3, 4, 5, 6 in these cells available to us. Okay. So this is what mentioned or asked in the question. Okay. Let's read the first point. Overcapacity in the industry. What we learn? If the word overcapacity is written, then it is maturity stage. When instead of the overcapacity, the word written is a huge overcapacity, then it will be decline stage. So it is nothing. Firstly, it is a characteristics, and this characteristics is of what? It is of the maturity phase. So we will write number 1 here first. Okay. Now read the second point. The company can continue to offer the product to the loyal customer. This point related to the loyal customer, we read where? We read it in the maturity stage. You can refer it in the maturity stage. We read that we will keep on serving our loyal customer. So I'm going to write it in the, sorry, not in the maturity. We discuss it in the decline phase, last one. Okay. So I'm going to write it in the decline phase. Okay. It will be 2 here. That we keep on serving our loyal customer. It is a point number 3 in the strategies. Okay. Further, the third point, the few competitor produce the basic version of our product. Few competitor, we read this characteristics at the introduction phase. So it is the characteristics of the introduction phase. Further, the product feature may be improved or enhanced. We studied this particular strategy that by improving and enhancing the feature, we can, you can say that in comparison to our competitor, we can extend some time in the market. That was of the maturity. So I'm putting it here, the 4th point. Further, attracting the customer by raising the awareness about our product through the promotion activity. This is a strategy of the introduction phase. The customer are not aware about the product. We try to aware them. High volume of the business and increase in the competition. This is a feature of the growth phase. So I'm going to write it here. Further, use the present product as a replacement. When we think for the replacement of the product in the decline stage, and this is what use the present product to replace. Use means do this. Do this means it's not a feature, it is a strategy. So write down the strategy here, 7th point apart from 2nd. Further, value-based pricing strategy may be considered. When you consider the value base, the feature which you inculcate the product and the similar value you wish to charge, this is the you can say that strategy of the growth phase, where you add on keep on adding the value based upon the feedback and charge the price accordingly. 9th point, the profits start declining at the time it becomes negative. This is just we read in the decline phase, the profit even though touch to the negative sometime, and even though despite this the company keep on producing the product in order to keep the entire product line or the product range. The 10th point, maintain the control over the product quality to ensure the customer satisfaction. So product quality need to be controlled so that the customer satisfaction can be ensured, in order to bring what? In order to uh, make some kind of a loyalty in him, so that up till the decline phase, he will remain in touch with us and keep on buying from us. So loyalty we built during the growth stage. So it is a strategy of the growth phase. Further, point number 11, strengthening or expanding the channel. When we strengthen our channel, supply chain, or the channel of distribution during the introduction, and this must be come here, point number 11. Obviously, 1 point left, it will come here, but we will read the point as well. The prices have to be reduced to attract the price sensitive customer. So it is there that we will keep the prices low so that we can sell it to the person who willing to buy. Okay. So this is the question which is asked for the, you can say that 20 marks. The part 1 is for, I think, 12 marks. We need to study the other 2 parts as well. Let's read the part number 2. List down the importance, NE4, of the product life cycle. This thing we explain in the note number 9 of the notes. Okay, we will study the theory, note number 9. We will read the third requirement prior to that. State the benefit of the product life cycle costing. What are the benefit of product life cycle costing? This is nothing but the note number 10 in our lecture note. So we need to study the note number 9 and 10 in order to answer these 2 parts. Now quickly move to the note number 9 and 10, and then afterward we'll wind up the session. Okay, let's read the note number 9 along with me. The use cases of the product life cycle. What was asked to you? What is the importance of the product life cycle? It is the same as use cases. If you refer the suggested answer by the institute, the same points are mentioned there. What is the first importance of the life cycle, product life cycle? It can be used as the planning tool. How it can be used as a planning tool? You already know when your product will enter into the growth phase, it will be the feature, and these are the available strategy. Hence, the feature and the strategy are pre-known to you, that this will be the feature. The moment that feature shown by the market, you know that your product enter into the another phase. So you can activate your plan. So you can use the product life cycle as a planning tool in order to know the feature as well as in order to apply the strategies. Okay. Further, you can use it as a control tool. You can compare your product with the product of the other competitor in order to appraise the performance. So you can do the product performance. You can evaluate the product performance as using this product life cycle as a control tool. Like how much time you find in the growth phase, for how much duration your product remain in the growth phase, and for how much duration the competitor's product remain in the growth phase. With this, you'll know whether your product performance is better than the competitor's product or not. Okay. The third use or the third feature or the utility, forecasting tool. You can use it as a forecasting tool. You know that post the growth phase, there will be the maturity phase, then there will be the decline phase. Hence, you can keep on, you can say that estimate the pattern of the cash flow and the sale and other thing accordingly. So it will help you to forecast as well in the future. Although the first point and the third point are similar to each other, but there is a minute difference. What is the minute difference? That you are here using the product life cycle is a forecasting tool to forecast the data which you will use in order to identify or pick the strategy. But here you are using it as a planning tool to see that what are the strategy available. Okay. So The product life cycle can be used as a planning tool. It can be used as a control tool. It can be used as a forecasting tool. But there is a limitation of the product life cycle when we use it as a forecasting tool. And what is that limitation? The limitation is this, that the pattern are not much reliable. It may be possible that for some product, the product, you can say that growth phase is a larger, but for the another product, the product growth phase may not be the larger. So it's not confirmed that how much duration you will find in an individual phase. Okay. And these three usage of the product life cycle is given on the page number 4.29 of the case study. The characteristics and the strategy which we studied prior to this, they were given on the page number 4.24 to page 4.28 of the study material. Okay. So that you can revise as well. What was the part 3 of the question? The part 3 of the question that you need to tell what are the various benefits, what are the benefit expected, that earlier action can be taken to generate the revenue and the lower cost. As we already mentioned, then when the product is in the design phase, then we even though make an attempt to reduce the cost. We can keep control the cost by identifying the various feature and opting the best strategy. Further, the more accurate and realistic assessment of the revenue and the cost. It helps us to assess the revenue which we are going to earn and the cost we are going to incur, because we are using it as a forecasting tool. Further, long-term rewarding. Why long-term rewarding? Because if at the introduction phase itself, we understand what are the features the customer is required and inculcate those features in the product, we can maintain our market share till the maturity or the decline. Further, the D point, overall framework for considering the total incremental cost over the entire lifespan of the product. So this framework, this can be used as a framework so that we can know that what cost we are going to incur. For example, we incur some R&D cost at the introduction phase, then we incur some R&D cost at the growth phase. So we can maintain a record of the R&D cost. Similar way, we incur the cost of marketing here, we incur the cost of marketing here, then we incur the cost of marketing here. So we can analyze them that how these costs are increasing. Individual cost can be considered. In tomorrow's class, we'll solve the question from the May 18 attempt. In that, we see that it was asked in the question that you need to compute the R&D cost as a percentage of the total product life cycle cost. Okay. Further, the long-term picture of the product line profitability. So it will give you a picture of the profitability, not year-wise, irrespective of mandatory requirement that we need to consider our profitability on the yearly basis, that in each financial year how much we earn. But life cycle costing help you to see that during the entire life cycle how much you earn. Okay. The second last point, control over the manufacturing cost. How you can control the manufacturing cost? Because if at the development phase itself of the product you keep those features in the product which are essential, you can control the cost at the manufacturing phase as well. Further, traces the research and the design and the development cost. It helps you to trace that what are the research and the design costs you incur over the product life cycle. So these are the benefits which one can generate from the product life cycle. Okay, and these benefits are given on the page number 4.29 of your study material. Now moving to one last topic afterward, which will wind up for the day. Note number 8, the characteristics of the product life cycle. The first character, that there is a finite life. Although the speed through which you passes through the different phases may be different, but the life is finite. It's a limited. Further, predictable pattern. The pattern of the revenue, the pattern of the quantity sold are predictable. There may be variation, but some forecasting is possible. Average cost and the profit per unit varies over different phases of the product life cycle. Different threat and opportunity arises during the different phases, hence they need to be responded by different strategic action which are apt to those characteristics. Different functional emphasis. In the first introduction phase, R&D is a major function, but in the maturity, R&D is not a major function. The marketing and the advertisement is a major function at the time when the product is introduced. But in the growth, everyone is willing to buy the product. Hence, they do not have a much role, although they are building the brand equity. But then they again have a role when the product market, you can say that declining, in order to keep continue selling the product. Further, F point and the last point, the product extension or the market extension can be focused with the help of the product life cycle. In the growth phase, we try to do the market extension, but in the maturity phase, obviously, we look for the product extension. Okay. With this, we hold up, although we need to solve some of the practical question. And apart from that, we need to refer this Maruti case study as well. That we'll do in the next lecture. Next lecture, apart from this Maruti case study and the practical question, will solve the question on the Pareto analysis as well, and we will learn that what is the Pareto analysis. Now, if any of my friend has a query, please send it to me quickly so that we can resolve the queries. My friends who are online, please send me the query. We'll wait up till the 9:10. Right now it's the 9:05. We'll wait up till the 9:10. Okay, in the meantime, when the other friends are sending the queries, okay. We must read one topic here, or let me just quote it, although we'll study it in the next lecture too. In the different phases, what are the major costs? These are the quoted here. Although it is not necessary that these costs will be incurred only during this particular phase, but the major proportion of these costs are incurred during this particular period. So small linkage is there. Then in the note number 12, the topic which is presently not in the study material, although asked in the previous question, that's why I inserted it as a topic itself. The various factors that are capable to enhance the profitability of the product life cycle. Okay, that we'll discuss in the next lecture. Friends, while solving question, if you find any doubt, the question which we done in the class today, the two questions, you can ask me in the next lecture too, although we solve the question either on a screen itself through the pen tablet or on a whiteboard. But still, if you find anything which is suspicious or not clear to you, you can ask me in the next lecture. Can we wind up the lecture? Okay, thank you everyone. Bye. Thanks for the